been a recent development in business interruption insurance claims. But what's happened? Hello, I'm Dominic Walker. Welcome to JMW's Inside Man YouTube channel. Please subscribe to the channel, like this video, and keep the conversation going in the comments section as well. So Ewan Cooper is a solicitor within JMW's commercial litigation department. Ewan, I mentioned then that there's been this development in business interruption insurance claims. What's happened?
Yeah, that's right, Dom. So business interruption insurance has been back in the focus of the courts, and the latest cases are arguably the most important decisions in the business interruption insurance space since the FCA test case. So there's been 3 judgments handed down in connected cases involving the pub chain Stonegate, Greggs and various eateries, which clarify issues such as liability, the treatment of government support, and the aggregation of losses under a common policy wording known as the Marsh resilience wording.
And what has happened in the Stonegate Greggs and various eateries cases?
So Stonegate sought to recover nearly £1 billion under its business interruption insurance policy. And their insurers didn't argue that their policy didn't respond to the claim, but instead contended that their liability was limited to 17.5 million, which was just 2% of the total amount claimed. The insurers also argued that furlough payments and business rates relief should be taken into account for the insurer's benefit. And the court held in this case that the adoption of government measures which significantly affected which and to the extent how the pubs could reopen were individual loss events, but that each government announcement on the pandemic did not in itself constitute a loss where it merely reiterated or clarified or even introduced trivial changes. Now, what is a major development, however, is that the court held that furlough and business rates relief could be deducted from a policyholder's turnover when calculating losses. So a mixed result for the policyholder and insurer. Now, in the Greggs case, they sought to recover £150 million under their business interruption insurance policy. And the insurers argued that the existence of COVID-19, the initial outbreak of COVID-19 in Wuhan, the emergence of COVID-19 globally or in the UK, or the coordinated government response constituted one single event. So only one loss occurred under the policy. And the court held in this case that there was a single occurrence at the initial outbreak, followed by separate occurrences when major restrictions were put in place. And this therefore meant that there were separate occurrences within each jurisdiction where there were local lockdowns or other restrictions imposed, and therefore separate limits of indemnity were available for each of those occurrences. But the court did clarify, similar to the Stonegate case, that trivial changes did not produce additional limits. And in the various eateries case, they claimed over £16 million, argued that there were multiple covered events and that its pandemic-related losses were recoverable until the end of the indemnity period, and in fact, after the insurance policy had expired. And in this case, the court held the losses which were approximately caused for a short time after the expiry of the period of insurance might also be aggregated by reference to the introduction of regional tier restrictions or to the second lockdown.
And so where does all of this leave us now, Ewan?
Well, insurers might think that their luck is changing after a series of policyholder-friendly judgments. The decision especially to take into account furlough and business rates relief when calculating an indemnity is a major win for insurers, and may significantly reduce their liability, even when it's found that their policies do respond to the circumstances of a policyholder's claim. However, insurers should stay alert. This case might end up in the UK Supreme Court, where the judgment will be subject to policy considerations. For example, is it right that insurers' payouts are reduced by the unprecedented support given by government to businesses? And who should benefit from this windfall? The businesses who the payouts were intended to support, or insurance companies? If you're unsure about your position in relation to your insurance policy, we'd invite you to get in touch with JMW, where we can assist with advising on these recent developments and other insurance queries.
Thank you for your insight, Ewan, and I'm sure we'll be speaking more on this in the future as well. If you'd like to contact Ewan, you can email insideman@jmw.co.uk or call 0161 82 81 999. Please also subscribe to the JMW Inside Man YouTube channel for the latest legal news, hints and tips. I'm Dominic Walker, JMW's Inside Man.